Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and/or investment strategies recommended and/or purchased by advisor, or product made reference to directly or indirectly, will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. And now, here's Bill Bullington.
Well, welcome back. Excuse me. It is a beautiful day out there. It's mind-boggling. These times of year always remind me why I live in Ohio. So Ohio is the summers here are just pretty phenomenal, and better than a lot of places I've been around the world, actually. And now that the winters are not that bad, that's pretty cool. I was just talking with a couple friends about how we used to have to drive to school, and the skill set you had to have in driving back in those days, we didn't have power steering. Kids today don't know what we mean when we say power steering. We didn't have power brakes. They didn't know what that was. An in-the-column shifter, they didn't know what that was. What's a clutch? It was a different day, and you had to have a lot of skill. I can't believe they were letting us 16-year-olds drive those cars in those conditions. It was mind-boggling. But anyway, so nothing is as constant as change, and I got to say, it's changed a lot for the better here in the last few decades. Mind-boggling. Think about how old I am and how much older I'm getting. And, probably another, I think I probably got at least 12 more years, but hopefully, knock on wood, don't get hit by a bus. And, that would be nice. And if those winters ever come back, we're in trouble. I mean, we are in trouble. I remember hearing these snow plows out. You could hear them plowing the snow. They would start around midnight, hoping to get it done before 6 o'clock, because that's typically when the school buses started running. And anyway, nice to reminisce on all that stuff, but not going to help us going forward. That's for sure. What will help us is there are a lot of developments in financial services, the financial field. They're really helpful. You've got a ton of more modern annuities out there, which is really a big deal. Because every day, I forgot how many hours it is, but I think 10,000 people are turning 60 every day in this country. And the closer you get to, the older you get, typically the closer you're getting to retirement. And to have a retirement income that you can count on is kind of key. It's really important. So if you're within 10 years of thinking about retiring, you should probably be I would be looking at some of the newer annuities, because they're not the same annuities that were around even 5 years ago. They've undergone a tremendous amount of change, and they're trying to adapt. And I think it's awesome. And here I'm looking at somebody who's 60 years old. So 60, they've got it, and they plan on working until they're 67 and collecting full retirement. So if somebody were to put $100,000 in today and started drawing when they were 67, their guaranteed income is $10,530. That's a lot. That's a really good rate of return, and it's a good return on the investment. And I've got I'm actually looking at a website. That's where I've gotten this information. And if you'd like to see, if you'd like a link to that website so you can play around with it and see what you might be eligible for, you can always call us in the office, 330-664-0700. You can email me. It's bill@bullingtoncapital.com. And just sit around and play with it. I think it's a really, really good alternative to fixed income for an awful lot of people. And the reality is, when you look at what it's willing to do, what they're willing to guarantee, it's higher than most people are going to make in their stock accounts, and even in like professionally managed stock accounts. I'd forgotten a piece of paper. I'll have to bring it in next week, but I'm looking out over the last 10 years on large cap stocks, mid cap stocks. Those are basically large companies, medium-sized companies, and smaller companies. I looked at international. I looked at which would be like Greater Europe. I looked at emerging markets, places like Brazil, Russia. You look at all those categories, all the major categories, and what they've done over the past 10 years, and you take a blend of that, because the modern portfolio theory says you need a certain percentage of each one of those, and real estate investment trusts for real estate, high yield bonds for bonds. You take the recommended programs, the same ones that they use to manage big pension funds, okay, for big institutions, and the returns are lower than they're guaranteeing here. And that's my point, and because I was asked it was probably a couple of years ago when I first started talking about these, some people were a little upset. Bill, you used to talk about stocks, and we're going to talk about stocks today. In fact, the software that I've been using, Telechart, it's upgraded, and man, I'm going to have to go back and take classes on how to run it. Fortunately, I have one of the old versions still on my laptop, and we can seek out stocks, and we'll talk about a couple individual stocks because it is a part. It is a part of your plan. It probably shouldn't be too big of a part, and we'll go into more about why that is a little bit later, and how in today's day and age, what are the best risk-adjusted returns? What investment vehicles offer the better risk-adjusted returns? Because that's changed too, and I actually like it. I mean, I like being able to sit down and read, understanding what I'm reading, and being able to make decisions that are extremely well informed. The reason I just decided to focus on extremely well informed was because when I first started in this industry, now this is going way back, but the amount that you had to read, it was crazy. And then some of the funds that were available, you would read it and then say, okay, this is what we're going to try to do, but we reserve the right to basically do anything we want to do. Really? Why bother publishing that? Yeah, I'm just kidding. But the bottom line is today you've got a ton, several thousand funds out there that have to stick by the set of rules that they publish in their prospectus. Okay, and that makes it a lot easier. It makes it easier to know what you might be able to, or what types of stocks or investments in general that you're going to have in your portfolio, and that's a big deal, because when you go to start, planning for taking out income from your investments, you need to know that stuff. You need to have a fairly decent idea of how much it's going to fluctuate, why it fluctuates. Not that you're going to anticipate that and try to time the market up. That's a bad idea. That's a horrible idea. the better idea is find the funds that are making the adjustments that you feel most comfortable with, and then stick it out. Okay, so that's a big job, and I'm absolutely sure even most of my clients, even though we can sit down and talk about it, I know this is not what they do for a living. So they're going to forget probably 80% of what we talked about 2 days later. But that's okay. That's one of the reasons I have a job, because that's what I like to do. I like going through and reading that stuff, finding out. I know how to get to the management discussion or how the fund is going to be operated, because a lot of it's done electronically now. And it's a very good feeling to be able to understand, okay, I see that the stock market's down and my fund's down too, and that should be expected, especially because of the way that it's being managed. Okay, and if I can if I can come and look at my portfolio realistically, this is where I think an awful lot of people fall short. They're not realistic with themselves. They come in and think that somehow I'm going to, if the market gets really bad, I'm just going to get out and I'll know when to do that, and I will know when to get back in. You probably won't do that. That's like saying that's the equivalent of being allowed to play for the Los Angeles Lakers right now, today, in the shape that you're in. And to say that you're going to be one of the leading 3-point scorers in the entire NBA, and you don't even play basketball. That's what that is akin to. And you just don't realize it. Most people don't realize it, that, somebody gave you a basketball and let you shoot from midcourt in the middle of an NBA game and didn't even put anybody around you. Some people are going to make it. And some people who are not in very good shape are going to make it. And it's not going to be skill. It's going to be luck. And that's my point. You can get lucky, and it seems like, hey, I knew that was going to happen. I know it, and that you just don't want to be in that position. And it's just it's crazy. But actually, I think the NBA players really have to work. Well, they have to work a lot harder physically, but even mentally, they have to work pretty hard. And why should investing be any different? It's a vocation. The difference is you're allowed. It's like you can go to any basketball court and start shooting. That you can go to any brokerage firm and start trading stocks. Same thing. You don't have to pass the test. You don't have to prepare. Now, you're better off if you have. And most people that train and prepare a lot realize how much work it is. Just like LeBron James, almost 40, still working out like a madman every day. And by the way, he's always worked out like a madman. Even when he was young, strong, and leading the league in scoring, he worked out and practiced hard every day. And that's what it's like psychologically. Investments, they're bringing out new products. I mean, it's unbelievable. I remember back in 2004, that's a long time ago, I was thinking it was pretty cool because they were bringing out literally about one new fund each month. Okay, that 3.5 to 4 years later, it was nearly one new fund a day. And that went on for a few years. And so if you could think of an idea, there was probably a fund doing it, whether it was even a good idea or not. A lot of people that market financial products take a look at the marketplace to see if they think there is a market for it, not whether it's a good idea or not. Will people pay them to do that? Will people pay to let you make money when the stock market drops? It doesn't matter how hard it is, that you have to know how to calculate implied volatility, carrying costs, and all other sorts of things that most advisors aren't even familiar with. So, but if you don't know that, you're playing lost, and the chances of you winning are about probably as good as winning a lottery. There are a lot of people that win the lottery every day. It's just that there aren't very many. And just like now, let me get off that subject. That's a little too far into the woods. The bottom line is, you really have to be careful. And I was looking at a couple of financial plans, and I was thinking, wow, these people, they go so into the details. And a lot of these details, you have to be able to pick the right answers. And so they're making assumptions. That's the thing about planning, is you're going to have to make an awful lot of assumptions. And every time you add another assumption, like how long am I going to live? Okay, that's an assumption. Now, what do you do if you live longer than that, and you hadn't planned for it? Okay, that's a problem. And by the way, who of us really knows exactly how long we're going to live? That's the only problem with that type of planning. You have to know, you can come up with the right answer as far as how much you could spend. And by the way, you're going to have to also guesstimate what your returns are going to be and in what order. Yeah. So you see how hard this is getting, like really fast? Okay, you got to tell me how long you're going to live. First of all, we can't start before you tell me how long you're going to live. Yeah. And I had one client who drove me crazy for 12 years. 12 years. He's every 3 to 4 months. This guy was so nervous about, he didn't want to leave any money after he died. He wanted to run out of money. And I finally said, hey, look, we've gone through this so many times. I'm going to tell you, here's your backup plan. Just go down to the sporting goods store and get a shotgun. That's your, and I know that seems kind of rough, but 12 years, 3 or 4 times a year. And yeah, and if you do, I don't have the patience with anybody. You do that 3 times to me now, and you're going to get that other answer. So, and that's one of the questions that, you just don't know. So you have to do estimates. What is the likelihood? And I'm always trying to underestimate the problem, or not overestimate. Yeah. And I'll have to explain what I mean more about that along those lines after these commercial messages. I got to take a real quick commercial break here. This is Bill Bullington here on 1420. Be talking to you guys in just another few seconds, and I'll give you those answers. Well, welcome back. Hey, this is Bill Bullington. I'm here every Saturday morning from 11 to 12 right here on 1420. I will be taking calls the rest of the day's show, 216-901-0945, 216-901-0945 if you have any questions. And, it's really interesting, I guess. After you've been doing this for so long, a lot of the things that you just kind of take for granted, and that's just human nature. There's an awful lot of stuff that we take for granted in this field, and the general public doesn't really know a lot about it. And it's just like that with any career. I think, from people that do drywall, doctors, that's very intense. Tax preparers, very intense. But if you talk to them about it, they're all like, oh, yeah, no big deal. That's because they've been doing it for so long. And sometimes I forget. So if I've forgotten something or I went over something, feel free to hit me up with an email, call me, ask a question. Let me know if I've messed up somewhere. Occasionally I say something and I'm not paying super close attention because something happens. And, I may not have said it perfectly, so it can lead people to take some other meaning from what the description was. And that happens a lot. And that is, I'm just amazed how frequently that happens in all fields, by the way. So thankfully, most of this stuff in our field you can fix. If you've had a minor mistake, actually sometimes a mistake that's pretty big, you can actually go back in and reverse transactions if you catch it quickly enough. And you can get right back on the same track. But what you can't do is do something with that are outside of general guidelines, like guidelines I'll talk about later in today's show. But when you are managing money, you're getting close to retirement. You're starting to think about how much money you're going to be able to spend in retirement. This is one of the things that kills me about all this financial planning software. These guys are asking you what kind of car you're going to drive, how much you're going to save up out of your budget each month to buy a new car. Really? You're really going to do that? How much you're going to pay in utility bills? I don't know, probably something higher than it is today. You have to come up with a ballpark. Okay, and that's where I like to get into the goal-based investing instead of cash flow-based. We're going to set goals for a certain amount of income, and then we're going to try to generate that income, which is hard in and of itself, to take care of all those expenses. And yeah, you do have to approximate how much you're spending now, and you're probably going to have to make an adjustment for inflation, which is one of the reasons that you hire an advisor, somebody to sit down, go through all that stuff with you, and say, okay, this is how much you're spending today. And to keep spending like that in retirement, how much money do you need? Are you going to get Social Security? Do you have a pension? Because those things are unbelievably valuable. And we'll talk a little bit more about that as soon as I get back from this commercial. I'm not commercial. I've got a phone caller, and I guess it's Bill, and you have a question regarding a PIMCO index?
Yeah.
Hey.
Yeah, what exactly is that?
I can...
Go ahead.
I'll look it up really quickly. It's saying the Quest index from PIMCO.
Yeah. Well, what it is I have I have an indexed annuity.
Okay.
And the index and the two indexes that they invest in are the Standard & Poor's, which I understand that, and then the other thing is called a PIMCO. And that I don't know what it is, but this is
that's a fund, and it's run by the Pacific Investment Management Company. That's what PIMCO stands for.
Okay.
And it's a fund that they're running, but they run a ton of money, and they've got probably a couple hundred funds out there. So
okay.
You'd have to figure that out. If you wanted to take a screenshot of it and send it to me, I can look it up. And
okay.
Yeah. So
I'm just saying. I was just the only reason I was curious about that is because I put my IRA into an annuity a year ago. Well, actually, in December it'll be 2 years ago. Okay.
Yep.
Last year, my annuity made nothing.
Right.
They were invested in both, and I mean, this is it's a large insurance company that I'm invested with. They are one of the top AA rated companies. So
right.
I mean,
Well, last year in 2022, you would have been down about. Hang on a second.
I lost nothing in my investment last year. That's
okay. Well,
what I can say.
So the S&P last year was down 12.5%. So that's a win.
Correct.
Yeah.
Yeah.
And that's how.
But
go ahead.
Okay. But now the PIMCO, as I understood it, from what I saw on the paperwork, they were down like 16% or something. I mean, it was,
Yeah. Yep.
So, anyways, I was just curious if it was some type of fund that is, was for higher end investors or something. Because I figure, let's face it, insurance companies have more money than you and I do.
Oh, big time. Yeah. That's why I want them making the guarantees. I don't want to be making the guarantees. Yeah, but and it's not uncommon. But see, that's the thing about the indexed annuities. They're typically, most of them are buying options on an underlying index. That's why the bulk of the assets are being invested in short-term treasuries earning interest, and they only have a small amount of money buying an option on an index. So if the index goes down, they're like, all right, well, we got the interest, and that offset most, if not all of the cost of the option that we just bought, because they buy them at an institutional level. They get them cheaper than you and I can. And
absolutely.
So that's a good deal. I mean, by the way, if I had access to those options myself, I would be doing that myself.
Yeah, that's what I said. I mean, ultimately, I would, like I said, I pretty much figured it had something to do, because I mean, actually, and a lot of people probably don't even realize this, but I mean, when the government was in trouble, during the Depression, I mean,
right,
they actually turned to the insurance companies for,
yep, yeah,
for bailout money, and I mean, so I figure most of those people probably know a heck of a lot more about what I'm doing than I do.
Yep, yeah. By the way, there were insurance companies during the Civil War. The Union or the northern states couldn't cover the payments for the soldiers, so an insurance company stood up and said, "We'll do it." Yeah, that was pretty good. Yeah. Well, hey, I feel bad, like I wasn't able to answer your question, but is there anything else?
That's all right. That was the only. I just I had no idea what it was, and I mean, I have an investment advisor. He's usually on top of things I guess he's in the process of doing some things personally, and I haven't been able to get hold of him to ask him, because I was just curious,
right?
Why what happened?
Yep. Well, if your advisor gets hit by a bus, you got my number.
Yeah, I do. Thanks, Bill. I appreciate it.
Right.
I do listen to your show.
Oh, thanks.
I listen to your show almost every week.
Oh, wow. Wow.
So, I mean,
thanks. I appreciate that. Yep.
Well, just so you know.
Okay. Well, have a good weekend.
Just so you know, your money's not wasted.
All right. That's good.
All right.
All right. Hey,
again.
thank you. Yep. Bye-bye. And I'm going to go to Max, and Max has a question on bonds.
Yeah, Bill, how you doing?
Good.
Okay, my question is this. With the Fed raising rates and bond prices dropping,
like a rock,
would now be a good time to load up on bonds? And if so, is there a specific sector of bonds you'd recommend?
I would recommend the safest bonds you can get, and the maturities on them are going to be relatively short. I think the peak is somewhere around 2 years. I'm not sure, because I didn't check it last week. And
so short-term government, corporate, agencies,
yeah, even you can get brokered CDs are actually
right.
You can have more than $250,000 in a financial in CDs and have it all insured, but you only have one account. And this is something I forget who I was talking to about it, but people still don't understand exactly how a brokerage account works. Like a brokerage account, and for this type of stuff, we normally use Fidelity. But a brokerage account is like a super checking / saving / investment account, because you can do all of that in one account. You go to normal banks and you have to set up separate accounts for an awful lot of that stuff. And you can buy CDs from other banks around the country in that account, and you're getting the FDIC insurance on those CDs that you're buying, as long as you're not going above $250,000 in any one financial institution. So
right, correct.
So that's good. But you can also buy treasuries, and we go in and compare them. Fidelity has an institutional login. That's what we use. It's a little bit faster. The inventory typically is a little bit better than the retail is. That wasn't always that way, by the way. For the longest time, it used to really tick me off. They were showing bonds and CDs to the public that they weren't showing to us. And I was like, hey. But anyway, they finally realized that the public needs a little assistance with that. So they kind of switched it up a little bit. But it changes by the second. I mean, this is what's really wild. Like, I'll be ready to click on a bond or a CD that I'm going to buy for either myself or somebody else, and before I can click it, it goes away. Somebody else got it before I got there.
Right.
So you really don't know until you actually get there and buy it. And even when you put an order in and you think you might have gotten it, somebody may have gotten that before you. So it's yeah. But you do have a lot of product that you're just not going to see or hear about. And I don't know why anybody. I mean, I have a checking account just because I've had it for so long. I just I don't feel like closing it. And I do a lot of my personal stuff out of it. But my bigger accounts, I've got it at Fidelity, and
understand.
There's a reason for that. They keep records going back forever. And it's just, you can do so many things. You don't have to go out anywhere. The guy that was calling in earlier was talking about the options. So I have an options account, and it's attached. When I log in, I see that account alongside of all my other accounts, and I don't have to do anything. Right. Yeah, so it's pretty convenient.
Now speaking of brokered CDs, why do their prices fluctuate? Whereas through my credit union, I have a CD, but the price doesn't.
Because you're going directly to the credit union that's offering the CD. And the CDs that are being offered online are in an auction environment all the time.
I see.
Yeah, people
That makes sense.
Yeah.
Okay, one more question about bonds.
Yep.
Now, we know that the Fed raising interest rates causes the bond price to decline.
Right.
But does it have the same effect on the dividend yield from the bond?
The coupon stays the same. Bonds don't really have dividend yields. They have got a coupon, and say the coupon is 5%. Well, that means when they first issued that bond at $1,000, that's par. That's typically what they come to the public at is the par value, $1,000. The coupon being 5% means you're going to get $50. Okay, on that $1,000 bond.
Right.
If the price goes up on the bond, so let's say you're paying $1,100 now, you're not going to get $50 on that extra. You're not going to get any more money. You're still only going to get $50. So the current yield goes down. If the price goes up, you're paying more, but you're still only going to get $50. Okay, so your yield is going to be less than 5%. If the price dropped on the bond, say it went to $900, you're still going to get the $50. So $50 is more than 5% of $900. You're getting a higher yield when the bond price drops.
Right.
Yeah.
Okay. Now you're speaking about individual bonds or like bond funds?
Individual bonds.
Okay. What about bond funds?
Well, the bond funds and Fidelity's got one, and we're not allowed to make recommendations like that on the air. The rules are just kind of.
No, I'm not asking for a recommendation. I'm saying the effect.
Yeah.
The effect of raising rates on the dividend yield.
Yeah, they're affected by everything that everybody else is affected by. They generally have access to, I don't know, let's say a really big corporation. I don't know, Ford came out and said, look, we've had some problems. We've got our money's being held up somewhere. Can you guys give us a 90-day loan and we'll pay you this much for it? Well, they'll have access to that. And in fact, those big companies will go to companies like Fidelity, like Vanguard, and say, hey, we got a private deal here. Do you want it? And so that's one of the reasons that those guys can do so well. And I do have a favorite fund that I can tell you about if you wanted to call me or email me. And because they've done a really good job in that area. And man, it took me a long time to be convinced. I kept watching, thinking, okay, here it comes. I'm going to, this is going to get them. And those guys did exactly what they were supposed to do and should have done. So I was positively surprised. And prices still are always going to fluctuate. And so you're going to get price fluctuation in bonds no matter what. But a good bond fund manager can help you manage that risk and try to keep it minimal. And
right. I see.
And so because they do it full time and we're part timers, and they have access to other things that we don't have access to, they're probably going to beat us. in the long run.
So the best approach would be own both the funds and individuals.
Yeah, and that's something that, you should probably talk about. And I got about 10 seconds before I have to take a quick commercial break. Did you want to hang on?
Actually, you answered all my questions,
Okay.
Bill, and I appreciate your show every weekend.
Well, all right. I appreciate it. Have a good rest of the weekend. Thank you.
Some days I climb the mountains, some days I touch the clouds.
Well, welcome back. This is Bill Bullington right here on 1420. I'm here every Saturday morning from 11 to noon. If you have a question, you can always call in 216-901-0945 during the show. Or you can go to my website and send us a question there. There's a contact us page, and it's bullingtoncapital.com. Or you can call us in the office, 330-664-0700. And I'm going to go right now to Gary. Gary, you had a question regarding estate planning?
Yeah. Good morning, Bill. I wanted to know if your organization offers estate planning services, wills and trusts and so forth.
Yeah, you actually have to have a law license to do that. So a lot of banks will have, sometimes they have people on staff to do that. If you've got enough money, they do. But typically we have a network of attorneys that we'll refer our clients out to that we know, like, and trust. And, they do a pretty good job. So that's a referral thing. That's one of those things where there are a lot of things you're not allowed to do as a registered investment advisor. And, nobody publishes this information anywhere. So everyone thinks that we wear all the hats. And you have to know a little bit about it. You have to know enough to be able to explain to someone what they need to ask their attorney, because we're not allowed to practice law. And without a PTIN number, that's a number you get with the IRS to be able to legally do tax returns. You're not supposed to give out tax advice either. So they're cracking down.
A friend of mine actually, did his own will and did a living trust on his own too, using some kid he got online.
Wow.
Would you recommend that, or do you really think it makes sense to hook up with a professional attorney?
Well, I watched this guy I'm just kidding. I was going to say doing a surgery on himself because he watched a YouTube video. But the bottom line is no, I would not recommend that. There are too many things that can go wrong. And it depends on if he has nothing in his name. Let's say he rents an apartment and all he has is a brokerage account and a bank account. Okay, so he doesn't really own much. And you could build millions of dollars in a brokerage account, but you can name beneficiaries for that. And so if your goal is just to avoid probate, that's kind of easy to do. But for anything outside of just a super, super simple, you need to talk to a professional. So you need to get in touch with an attorney that has experience in those areas. Okay.
Now, have you ever heard of a brokerage account being in a trust?
Oh, yeah. Well,
is that
trust
pretty common? And what are the advantages of doing that?
Well, the advantages are there can be many, and one of them is avoiding probate. Oftentimes people use trusts to avoid probate, and that's probably the biggest advantage. The second, probably a tie with the fact that when you put a trust together, you get to determine how your money is going to be distributed. You can do that with a will as well, but the will is going to make sure that all the assets go through probate, and sometimes that can be really expensive. And normally the will is a part of the trust process anyway. And and again, these are all questions that everything I just said, you have to forget and pretend I never said it. That's all legal advice. And literally, you need to talk to an estate planning attorney to get those questions answered legally and get them done. And I realize it's so funny. I feel bad. like I'm letting people down all the time. And I'm like, you don't understand. You're jeopardizing my career by asking me to give you answers to these questions, because I know you're going to want the answers to be right. But but because we're not licensed, and that's not what we do on a daily basis. And I've seen attorneys mess their own estates up because they don't. It's not what they did. They did something else. And being a lawyer, it's unbelievable how many different career paths that can lead to. But they all have to pass some of the stuff initially going through law school. But if you don't keep up with it, it is just, wow. It changes all the time. So, yeah, I would talk to 3 or 4 attorneys and just call them and call their offices and say, look, I'm looking for somebody, and go with the one you like, and you can also call your local. I think each county's there's a referral service for people looking for attorneys. But if you wanted to hit me up with an email, I can send you the one for Cuyahoga County.
Okay, great. All right, Bill, thanks for the information. Great show.
Well, thank you. I hope you have a good weekend.
Bye-bye.
Bye-bye. Yep. It's funny. I remember when I first started in the industry, they didn't have all these regulations, like what you can and can't say. And I know now why they have the regulations. That stuff is hard. It changes like all the time. And not that I am, I'm not the world's biggest fan of attorneys, but I know that they are necessary. In a lot of areas, it'd be idiotic to go without one. And if you've got an estate that's substantial, and substantial could be anything above $250,000, I would have an attorney for that. I would have them take a look at what you're doing. I'd try to shop around and ask about how often they're doing those, how many they've done in the past year. That's kind of important. It's important that the attorneys that you're dealing with deal with this on a regular basis, because the rules change so quickly and so fast. I mean, it's mind-boggling. Your head will spin, and I'm sure their heads are spinning all the time trying to keep up with all the changes, especially when people have houses in more than one state. A ton of people here have homes, second homes, or condominiums down in Florida or North and South Carolina along the coast there. It's a lot. It's a lot to keep up with, but hey, it is what it is. And I just completely lost track of what I was talking about. Oh yeah, the fixed income is one of the outside of stocks. And I feel bad. I was going to go through and talk about stocks today, and maybe I'll just do that. The bottom line with stocks is you got to be fairly adept at reading financial statements. And when I say you got to be, you should be, because you don't have to be, because you can buy a stock knowing nothing. I see people do it all the time. People call it, when they're normally calling me, they're calling me because they bought a whole lot of a stock and it dropped a lot. And it was a fairly significant portion of their portfolio. And they're wondering if I can make it back as quick as they lost it. Well, you'd have to take the same kind of risk you took to lose that money to get it back that fast in most cases. So you need, my point is that you need to be able to tell beforehand, know all that you can know about the company, or just stay away from it. And by the way, today, for somebody to do individual stocks, this is something that you should do if you really like the company and you're looking to make a decent return. Like I like Procter & Gamble. I'm just going to tell you, I really like it. Why? Because I use Tide. And I like Tide. And Procter & Gamble makes a ton of products. They make Pampers. They have Mr. Clean. There's just tons and tons of products. And if you go through most American households, there are at least 4 or 5 products from Procter & Gamble. Okay, so tells me that, yeah, they probably not going to go out of business anytime soon unless people quit washing their clothes and taking baths and not washing their dishes. They've been around for an extremely long time period. They pay a really decent dividend, And I was able to buy it a couple of years ago when market was dropping, as it has a tendency to do every 12 to 18 months or so. And it's been actually I've held on to it for a little bit longer than that, but it's been a very good stock. Has it gone from and this is, by the way, this is one of the problems to trying to hit the home runs. When you do occasionally hit the big home run, people expect you to do that all the time. Hey, what have you done for me lately? What? No, I'm just kidding. Kind of. But those big home runs don't come around all that often. Normally it's over multiple years that happens. And that's pretty tough. It's really tough for an awful lot of people. I'm looking at Procter & Gamble. If you bought that back in the mid-'80s, 1985, you're up just on the share price alone, just on the share price, you're up 4,834%. Okay. Now, that stock's been down more than 40% multiple times over that time period, multiple times. But you're still up 4,800, and that does not count the dividend. The dividend over that time period is probably at least doubling the return on that. So, but if you looked at it over the past, let's say go back to 2020, it's right where it was in 2020. Oh, look, the ride must be over. No, that's actually how it's done the entire time. And that's one of the more frustrating things about individual stocks. That's why the fixed indexed annuities are so popular, especially with people that are getting closer to retirement. You're getting close to retirement. You don't want to see that sucker drop by 40 or 50%. That's not cool. You're getting ready to retire. What you want is a guaranteed schedule of income. And you can get that today, and it's extremely competitive. And when I say extremely competitive, I'm not backing off here or trying to hide something. It depends on your age. It depends on your age and how much money you have to invest. And if you want to know exactly what that is, feel free to give me a call. And I promise I'm not even going to have as much inflection in my voice as I do right now. So anyway, just feel free to call 330-664-0700. That's Bill Bullington. That's my, there's only 3 of us in the office there that answer that phone. So we will call you back as quickly as we can. If you'd like to see how much income you might be able to generate for yourself in retirement, awesome. And that's just part of the package. I think everybody has some room for stocks in their portfolio. Everybody's different that way. So we try to accommodate as many as we can. And I promise next week I will talk about individual stocks that I've picked and that I've owned. I did talk a little bit about Procter & Gamble today. I still think it's a good buy. I hear the music. That means I got to go. This is Bill Bullington right here on 1420. Have a good weekend, everybody. Good luck and good investing.
You just caught another edition of the Bullington Capital Report, broadcasting every Saturday at 11 a.m. on AM 1420, The Answer. If you have a question and you'd like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or online at bullingtoncapital.com. That's bullingtoncapital.com.
The preceding program has been paid for by Bullington Capital Management, LLC.